Good morning, everyone. Good morning, ladies and gentlemen. Let's do a little bit of tidying up.
Good morning.
Hi, good morning.
Good morning, Luca.
Good morning, all together.
Okay.
Good morning, all.
Good morning, everyone. Tyral, I've just posted on the Facebook group as well. Okay, so just if you want to double check that everything's okay, it's okay here as well. Jaya, would you mind would you mind doing co-hosting?
Yeah, sure.
Fantastic.
Okay.
Okay, you know co-host. Okay, guys, lots to talk about today, and I'm sure that we're going to have lots of questions as well. And maybe kind of something that will happen this week will also bring some of the things that we've been talking about for many months to the fore, and kind of like you maybe now can understand why talking about security and the settings protocols in cryptocurrency is important. And it's not something that we're just discussing that is not relevant because everybody else is running ahead. When something like what we had this week happens, then we really need to have a hard look, because it is in these moments when big events happen that there is a lot to learn, both from us as individuals, connecting to this to the cryptocurrency world, but also from the point of view of the whole sector actually is learning from its own mistakes. Okay, so let me go straight away to discuss what happened this week, in case you haven't noticed. And let me share my screen. Okay, let me start going with some basic charts. Okay, so this is the Bitcoin chart, and this is where we were, around last week. This is 5th of May, so just over a week ago. We were sitting, quite going, as you can see. This is a 1 hour chart. Okay, so each one of these bars, these candles, represents 1 hour in time. So if you can see, we were going up really sideways, the price not doing much, and then we started dropping, okay, and dropping until here on TradingView, depending on where you're looking at for the chart. And different exchanges show different numbers, slightly different number where the price got to. On some exchanges actually went down as low as 24,000, and this is what we were discussing last week. I was saying that there is a where the price might decide to maybe stop and turn around if it broke the 28,800 was the previous low. So just quickly go to the daily chart, so we can see, we can go back in time, and if you can see this level here, was the previous low that we reached in July 2021. Okay, which was around 20. What's that? 28. Can't see exactly the price. On this chart is showing 29,000, but on Binance it got to about 28,800. Okay, so once we break this, then we were looking at the next where price could stop after that, and this is where we highlighted this area here. Okay, anything between 22 and 24.5, where price might stop and start climbing back up. Okay, so we are now on certain charts, we have reached this point already. If we were to break this again, this is the next area where price might kind of pause and stop. Okay, so we are talking about high teens and low 20s. Okay, so we might. I don't have a crystal ball, so I don't know exactly what happened, but I'll try to explain the events of this week and what has caused this cascade of prices and the the whole crypto market has lost, about 50% of its value very quickly. So it is a very big event. Okay, and we can see now we are at the levels at the beginning of 2021. Now that the price has climbed back up, we are back. Basically, we reset the clock back about 18 months really. So now, why all this happened, and this is what has been responsible really for it, and it's been kind of the Luna UST debacle. This is the chart, the 1 hour chart for Luna. Okay, and this is the 1 hour chart for UST. Okay, now Luna and UST are closely connected. Okay, UST is a stable coin. It's an algorithmic stable coin. So that means that where the USDC and USDT are collateralized by US dollars, so they kept the peg of one USDC and one USDT is supported by the existence of dollars on actually bank account vaults in the US. The UST instead, it was supported by having reserves in different cryptocurrencies. Okay, the main cryptocurrency that is connected with is Luna. Okay, and it had let me show you basically is using a seigniorage shares model. Okay, so whenever there's volatility, kind of like the USD stablecoin, if there is more demand for USD, then Luna tokens are removed from circulation. Okay, so basically one USD worth of Luna is burned to mint USD. But also the other things happen in the other way around. So if the USD price goes down, then you could basically exchange $1 value of Luna for USD, and that is the mechanism that will keep the peg to the dollar. Okay, and recently the Luna Foundation Guard have actually bought a lot of Bitcoin and Avalanche coins to support Luna as a backstop to the USD stablecoin. So really, when we look at this chart, I mean, this is the one really a bit shocking, okay? Because you see here that before price started going down here, and this was at the 9th of May, okay? So only a few days ago it will be started. Before that, you can see the price, the chart is just flat because this is a stable coin. So it is designed for the price to be always at or around $1. So it might fluctuate a little bit, go to 99 or 101, but it always then come back to parity, to the $1 value. So what happened here, and for reason that we will discuss in a moment, when the stablecoin loses its peg, then the stability mechanism comes into place. Okay, so when we can see here that the value of this stablecoin goes down from $1 to in this case to about 75 cents, then the stability mechanism all the way here is selling the reserves to reestablish the parity, so to go back to $1. Okay, but the thing this is what we're talking about then, the protocol and how the protocol has been well thought of, well put together, or if there are any vulnerabilities. Okay, because this is when we see how important it is to do the setup work properly. Okay, because at this point there's a lot of people now, a lot of traders and people that use these protocols, they have understood that there's something that is going wrong and thinking, okay, Luna token and USD have got a lot of value, over 30 billion amassed in value in these protocols, and we can make money here. So we can now start selling the USD, at $1, because it is going down. There is so much pressure on it, and they would struggle to keep the peg. So we can make money by shorting this. And as you can see here, as the protocol was fighting against trying to regain the peg, there's another way of sale, stronger. Instead of getting weaker, it's actually getting stronger. And any attempt to regain the peg, then it keeps failing and failing and failing until now. It's at the moment it's standing at about 13 cents on the dollar. I mean, this is equivalent to say, you have money in the bank. Let's say you have $1,000 in the bank, and 3 days later, those $1,000 that you have in the bank are now worth, 130. Okay, because this is what's considered on a par with cash. Okay, something that is equivalent in between fiat money and crypto. Okay, so it is very, very big. And because the Luna was the main token that was designed to support the UST peg, it's got into kind of like a death spiral, because people will sell the UST, and then Luna would be, how it works is basically you mint tokens in exchange for your in the mechanism. It would go from a few millions of Luna tokens to then mint more and more and more to support the peg. And in a way, the Luna tokens went all the way from being over $100 a few weeks ago to now being completely worthless. Okay, at the moment, the actual blockchain has been stopped. So we don't know if Luna is going to come back into existence or not, because the value has gone down so much. They wanted to stop a governance attack. So somebody buying many Luna tokens for very cheap and then using the voting power to then control the blockchain. So at the moment, they have stopped the blockchain completely, and they're waiting for enough validators to come back on board to decide what they're going to do, if they're going to relaunch it or not, and to actually put another kind of a white paper forward on how the steps that they're planning to take to relaunch the blockchain if it gets launched. So but the thing is, I mean, this is what happened for one protocol, which is Luna, and then of course he has taken down most of the other layer 2 also protocols that were built on this blockchain. Like, for example, Anchor, that is used. It was used for many people for staking the stable coins and getting about 19-20% interest. That has gone down over 80% as well. And everything else is built on Terra has gone down the same, really over 75%. So it's been bad for the old ecosystem, for the old Terra ecosystem. So we don't know exactly what's happening with Luna, and we'll see in the news in the next few days. But what's happening in the meantime is that to try and maintain the peg, they didn't just sell Luna tokens. They also sold the Bitcoin reserves, and they sold the Avalanche reserves, because those are the two tokens that they had. And so when we start looking at this, some of these drop is actually down to the Luna protocol selling billions of Bitcoin. And how this went down, and it is explained. I mean, you can follow it on social media. There's lots of articles about exactly what went on. It's not here. Let me see. So, what I was going to say. So some of the drop in Bitcoin has been because of the sell-off in Bitcoin to support the UST peg. So if you start comparing now what's happening Bitcoin to other cryptocurrencies, so we see that this is all across the board. So let's go in order. So let me just first of all, go back to the 1 hour, because we want to see the recent activity now, not so much the historic activity. So let's go back. Let's do a recent chart. So this is again, this is 1 hour chart. Okay, so Bitcoin is actually dropped 23%, Ethereum 28%. Let's go down the list. So what about BNB? So where is BNB? Okay, so that's the BNB chart. And then we'll go to have a look at XRP. So we just I'll just put all the top 10 on there, so you can see that pretty much you know, all of them followed the same. Let's use the Binance data. So all of them pretty much follow the same drop. Some more, some left, some less, depending on the coin itself. So we got Solana there. We got here Polkadot. Okay, so you see that from everything has gone down. So Bitcoin is seen as a store of value. So it's the one that has done better, I'd say, in this downfall. Everything else, as you can see, as when prices are going down, goes down more than Bitcoin, and you can see very clearly here. So the candles are the price of Bitcoin. All the lines are the different other altcoins. Okay, so we got BNB, Ethereum, XRP, Cardano, Polkadot, Solana. What have I forgotten? Let's go in through top 10. Oh, Avalanche. Yeah, Avalanche is the other one that's interesting to see because it was connected, because it was kept as a reserve. So let's have a look at the Avalanche price as well. Okay, and we can see kind of like not surprisingly, Avalanche is the one that dropped more of the top 10 coins because their coins were held in support of the UST peg. Okay, yes, Bitcoin was as well, but as a percentage of the tokens, and it wasn't as big a position as Avalanche. Okay, so yeah, we can see here as the shape of the graphs for all these coins is pretty much the same. What changes is simply the percentages. You know, so you can see the coins that have got more support, and the ones that have got a little bit less support, so they're more volatile. Okay, you can use it almost like an index of volatility. So after Bitcoin, we got pretty much, you know, BNB and Ethereum, and after that, then we got XRP, Cardano, and then Polkadot, Solana, and Avalanche. These are all the top 10 once you take out the stable coins. Now, this is a discussion as well to be had about stablecoins. So we talked about before about, you know, how stablecoins are important. It's probably one area that would be good to have some regulation in. Okay, so but to understand that stablecoins, and this is an article that's on Messari. Now, stablecoins are designed to have a stability mechanism, but it doesn't mean that they cannot go away from that center, from that parity. And we can see here in the history of all these different stable coins, they are listed in terms of market cap. So the biggest being Tether, and then USD, and then so on, all the others. You know, they all have varied in time. They're gone as low as Tether. Maybe is a special case, but we just ignore that for now. But look at USDC, Binance USD. So they've gone from 89 cents to 117. Binance USD from 90 cents to 115. So they are designed to come back to parity, but there is some flexibility. So they can move away from parity for a short time before the mechanism kicks in. Okay, and this was a few days ago. So at that time, Terra was down to 67 cents. Terra USD, so the UST now is gone. It's gone down a lot more than that. Is, you know, as I said before, is just over 10 cents right now. And here you can see the type of stable coin. So Tether, USD, and Binance are fiat backed stable coins. USD is an algorithmic stablecoin, so as is DAI, and we can see also Frax and MIM are also algorithmic stablecoins, and these are some more fiat stablecoins. So it doesn't mean that they cannot move away from the $1 value, but they are designed to go back to parity. Okay. Now, once we look at really at algorithmic stablecoins, these are still, I'm not saying they're experimental, they're quite new. Apart from DAI, that's been around for a long time. But really, if you're thinking of holding these coins, then we really need to have a look at, how the mechanism works. So what happens when something goes seriously wrong, like it did this week? And the thing is to understand is that if there is a vulnerability, and it doesn't need to be, hackers that exploit the vulnerability, but if there is a vulnerability in the code somewhere, at some stage it will be found and it will be exploited, whether with hacking or with kind of like things that are allowed in a way by traders that are shorting a particular coin, like happens, in this case, it will be done because money, money greed talks. So if people see that there is money to be made somewhere, they will go and take it apart to get every last bit of value that can be extracted by easily by taking part in any particular action. Now, people that made a lot of money out of the drop of Luna. Just imagine that a few days ago, the whole protocol was well over 30 billion, and now it's gone back to kind of like a few, to much less than a billion in value. So everything, all the value has just gone, disappeared. Whether it's going to, and for those of you that might thinking, oh, the Terra now is worth below 1 cent, maybe I'll take a shot at it. Just imagine that where there were about a few million tokens of Terra, now there's hundreds of millions available. So for it to go back to even $1 would be a monumental effort. Okay, so don't just throw good money after bad if you're thinking about it right now. Okay, so this is the big worry that happened last week. Now happened this week. Now, has this stopped? This killed the cryptocurrency industry? Absolutely not. It just it's one of the events that will be marked, let's say, in the annals of cryptocurrency, but it really hasn't stopped anything. Okay, because the work, when you think about it, a lot of the protocols, a lot of the blockchains that are in the top 10 by now were actually launched during the bear market, when prices were even lower than where we got to now. So I just want to go back to the Bitcoin chart on Binance because it's easier to work with. So the thing to realize is that this will be seen, in years to come as a blip on the chart, the same as, now we're going on the longest time frame. So I'll go into the weekly chart. So we can see, even with all this drama, we're still way above the 2017 top, which is another point where the price might decide to pause and stop, because this level, and this other level where there was some significant activity. So it will be a strong support point, to around the 20,000 level, because it was a previous high. But when we see in a few years' time, then this kind of like now this level seems low compared to the recent highs, and then this will become another bump like this once Bitcoin takes the next leg up and then starts moving towards the 6 figures. Okay, but what I wanted to discuss with you is that your kind of approach to this market, like I want to share it, what happened with me this week. Okay, what happened is this during all this craziness, and all of you, I mean, just look at these numbers for the last 7 days. Okay, Ethereum minus 23%, Bitcoin minus 16%, BNB minus 20%, XRP 25%, Cardano 25%, Solana 38%. So these are massive movements. Okay, Avalanche 41%. These are absolutely massive movements. And if you are an investor and you see some of your investing, you lose 1/3, half of your value, and obviously it is a natural emotion to panic. Now, I personally didn't panic this week. Maybe I'm strange. Okay, yes, I was worried, like everybody is worried, and I was watching the activity that was going on. I didn't panic simply because of the way they approach this space. Okay, and I repeat it with you, and it's something that I've said many times. Kind of the first thing, guys, if you put in any money in crypto, make sure it is money that you can afford to lose. Make sure that if the price goes to zero, like what happened to Luna, that you don't lose your house, that you don't, that you do still have money to pay your bills and everything. So don't put money that you need to live on in crypto. So that's the first rule. And already, if you do that, you can have a level of detachment, okay? Because you're thinking, okay, fine, yes, it might even go to zero, but I'm okay with that. I've got enough money to live on. I've got enough money invested in other assets. It's going to be painful, but it's not going to be the end of the world. Okay. Secondly, how do you approach this space? In a sense, are you in it because you have maybe, I don't know, 10 grand that you want to invest in and try your luck at something, and you're hoping that next, in a month, 2 months, you maybe have 15, 16 or 20 or 30 or whatever it is. Or you might invest like the way that I am doing, trying to understand the protocols, or basically, obviously, this is different from companies like in the stock market, but to understand the projects they are building our future. Okay, and the same way, like 20 years ago, you might have looked to invest in, the Googles, the Facebook, the Amazon of this world, because what they were trying to build. They had a vision of the future that you can see, you recognize, and think, actually, this is interesting. I want to be part of this. And this is the approach I'm taking. So the investment I have made, apart from the fact that most of them are still lucky enough, because I started early enough, still in the green. But apart from that, even if they went, well into the red, I'd be very comfortable keeping my holdings, because the reason I have invested in the projects they have chosen are not to make a quick buck, but are because I believe in the technology that they're building. And this is the second part of the subject that I was, talking to you before. Kind of like, what projects do you choose, and why? And this, before the end of this thing, I'll let Jonathan as well have a say in this, because obviously, being somebody that works, every day in Cardano, would be able maybe to describe this better than me. Kind of like, the actual design of this project is very, very important, because the strong projects are planned for this kind of events and go ahead regardless and march on. The bad project, the ones that have faults in the design, will fall by the wayside, and some will not get up again. Now, we don't know. Luna was one of the top 10. It was up to $120 just weeks ago. It had a value of over $13 billion. Now is at the moment, unless it's resurrected some way, it's worthless. Okay, and this is, I'm not saying they've done it on purpose. Obviously, there was a vulnerability in the design itself. It hadn't been thought through enough. Okay, and this is what we look at. Then we need to investigate, thinking, okay, which projects have that depth? They have thought about all these things. They are planned for all these events. We have the project already planning, for example, for for protection against quantum computers. These things are important, although they won't come up on a normal week when you're choosing to invest in Dogecoin or Shiba Inu or whatever else you might choose. It's not things that they normally come up. They only come up when something goes wrong. And this is why I keep banging on about Cardano every week. And probably the two strongest projects I can think of from that point of view, for me, are Cardano and Algorand, because they are being built scientifically. Okay, and these things eventually, not at the moment that the industry is still very young, but in 10, in 15-year time, when we are running elections on the blockchain, when we are running entire financial systems on the blockchain, these kind of details are kind of important. The same way that you would like to know that if you have a bank account and you got a lot of your value in there, you would like to know that it's kind of safe and you can get the money out when you want to. I think it's kind of important. Okay, so it is important as we transfer our value to these other kind of like code-based protocols that are in crypto. It is important that we make sure that the code is safe. Now, we have seen, history has told us, for example, that at the moment, and things may change, but Ethereum is not very safe, because a lot of money has been siphoned off, and it's due to, although there can be a lot of code, a lot of attention paid to security, there is some vulnerability that it's inherent to the language itself that is used to program Ethereum. So you can only go so far because the language only allows you to go so far with security. So I hear all the time, oh yes, I'm in crypto, I invested in that and I made whatever 300% in 2 weeks. Fine, and there are projects where you can do that. But choosing something that you invest in now and can be wildly in profit in 10 years' time is a different thing. Because a lot of the projects that do the 200, 300% in 2 weeks now, they just be nowhere in 2 years' time because they just disappear. Out of this, 13,000 projects, how many do you think there will still be there in 5 years' time? A handful, maybe a couple of hundred. Okay, so it is very, very important that you do your research and you find out which projects are solid, which ones have got legs, and before you take your bets. But the moment that you have made those choices and you have made that kind of research, then you can, in a way, detach yourself a little bit and look at this a little bit like a movie. And you can watch what's happening on the markets without panicking and without making decisions, because obviously, I've followed different. I'm a part of many different groups and I listen to different communities, and there are many people that are saying, "Oh my God, this is kind of like I'm never going to get into crypto again. I'm selling everything, or I'm just buying whatever. I'm selling all my old coins and I'm buying Bitcoin, or I'm getting out of the market altogether." When it is probably the worst point in history to sell. Okay, and this is what happens when your fundamentals of engagement are wrong, when you invest at the wrong time, or you invest too much compared to what you got to your investable capital. And this is important, because if the first step is wrong, then your emotions will not be in the right place to deal with events like this, and you won't be able to make rational decisions. Okay, I've had several discussions with different people that I coach on an individual basis this week, and the kind of the main thing I've been trying to achieve, been trying to calm people down so that they would be able to, without me telling them what to do, but they would be able to actually calm down and make rational decisions and make the right decision based on the circumstances. Okay, so the first thing, remember, I won't tire to say this, just remember to be in the right place first, to only invest what you can afford to lose, and then to take it slowly. There's no time, there's no need to rush. We're still very early in this world. And you've got plenty of time to get in and get engaged. Now, there are several things that happened this week. Obviously, as there is a lot of activity, then what happens in places like Ethereum, where the transaction costs go higher when the network is congested. Then we go on to Ethereum prices, gas prices have gone down recently, these past few weeks. Now they've gone back and cost, these past few days costed hundreds of dollars to have simple transactions in Ethereum. So a lot of people were stuck having maybe money on the cold storage wallet, and because they didn't have maybe many coins, maybe had a few $100s worth of one particular Ethereum coin, it got to a level where it was practically didn't make sense to sell these coins, because the transaction cost was almost as much as what they had in storage. So we're in a position where you got your funds, but you can't really sell them because the transactions are higher than what you have to sell, which is really, really hard to take and to understand when you find yourself in this situation. But at the same time, look at this. Oh, come on, why is it? Okay. Now, although we have been kind of like on a bear market in the past few months, now the money that's flowing into blockchain projects is growing and growing and growing every month. Okay, so we hit, for the 7th consecutive quarter, the inflows. So this is kind of like new projects that are being funded. Okay, so the amount of money that goes into new project is growing. So why do you think that all these hedge funds and VCs are actually putting their money in a market that is going down? So they wouldn't normally be doing it if they didn't think that this market had a future. Okay, so these are the things that you've got to be kind of in tune with, rather than, oh my God, the price is going down 10% or 20% this week. Okay, because it's difficult to make sense if you just look at prices. There's only so much you can look at charts, and if you don't understand, if you're not an expert in technical analysis and trading, the charts will not tell you very much. Okay, and listening to other people that might have it right or wrong in their, maybe wrong or right in their analysis, will not get you any richer than you are today. Because you're not in control of the decision-making process. Now, let me go on to a couple more things that are interesting too. This, by the way, and in a way, it's this is a tweet by Charles Hoskins, which is the founder of Cardano. Okay, but these are some of the VCs that are that were in Luna. So these are people that got involved in supporting Luna, and you can see that even Luna is not only was a very strong project, but you can see, Mike Novogratz. You can see UOB is one of the main exchanges, Galaxy Digital. So this is a project where everybody was in it. Coinbase Ventures, Binance. So even projects that are very, very highly, strongly supported, can't go wrong. Can't go wrong if there are any vulnerabilities. So it's not necessary to think, well, Binance and Coinbase support this, it will be a success. Yes, it probably has a higher probability, higher chance of being successful because it has strong backers, but it doesn't mean that, necessarily that ensures a project's success. So just be aware of this, as well. Look at this Pantera Capital. So everybody, there was anybody in crypto is in there really. No, sorry, this is something that I was going around and looking before the event. So this is another chart of Bitcoin. There is talk. I mean, I don't know how they get this thing. They said the inflation has peaked. Yes, it's slowed down. The 8%, 8.3%. They're seeing kind of like it's slightly lower than the previous reading. So they think that inflation has peaked. I mean, I personally don't believe that we're anywhere near the peak in inflation, because I think, this is my personal analysis, and as you can say, take it with a pinch of salt, okay? Because I might be wrong as well as I am right. But I do take kind of like an economic view and a macroeconomic analysis of this, of what's happening now in the world, okay? And so as now the US, the UK, most economies are reining back on the monetary policy, so they're tightening the monetary policy. the next step, what we're going to see at the beginning of the summer, because it takes a couple of quarters for that to translate into numbers, what we're going to see in the beginning of the summer, probably, we're going to see many economies starting to go into recession. Okay, now, especially when the elections, the elections in many countries are approaching, nobody wants to be into an economy that's going downhill. So the only really tools that are left to many central banks to try and stop the economy going into recession is printing more money. So there might be, although now there is a monetary tightening, as they start seeing signs that the inflation is slowing down and thinking, okay, we got things under control, there might then be a political push saying, actually, we need another easing because the economy is going badly and we've got to stop it going into another recession. So if that happens, then this is, again, it's going to be another money that floods the market, and the money must find a place. Okay, so generally what it does when there is an excess amount of money, it finds its way into assets. So assets are the stock market, prices of precious metals, and etc., and also crypto. Okay, so we could go into that kind of narrative simply because we have interest rates that are really at an historic low, so that actually leverage doesn't really do much now to control the economy, because even in the UK, even if we had, for example, in the UK, we had 3 interest rate rises recently, but we're still at 1% as the base rate, which is historically at the lowest it's ever been, apart from this past few years, which was even lower than that. But 1% is a really, really low level. So it doesn't make a huge difference to the economy if you then use that to stimulate the economy, going from 1 to 0.75%. It doesn't have that much of an influence. So the main leverage that most central bankers are is just printing more money. So that's a spiral that at the moment is going to be difficult to stop, because by printing all the money that they have, and now they're trying to raise interest rates, what that also is increase the amount of money they have to pay simply to service their debt, because they've added trillions of pounds or dollars to their debt. Now, when people are buying bonds, they need to pay the interest. So if they increase the interest rates, now they have to pay more interest. And how do they pay this interest? They have to print more money. Because if you're in a recession and they can't raise any more money through taxes, because people are not earning this money, because their bills are going up, they're paying more for gas, they're paying more for electricity, they don't have this much money to spend. So the tax revenues will not go up, even if they raise, how much they planning to tax. It's very difficult in an economy that's doing badly to raise more taxes. So really, the only leverage they have is printing more money. Okay, and this is going to be kind of like a long term. I don't know how long they'll be able to keep this game going, but I don't see it as this is going to rebalance anytime soon. And as most commentators are seeing kind of like an event at some stage in the future when they're thinking, actually, guys, we need to have a chat here. We need to have a chat about, this money thing that you got in the bank. I think we must redefine how much it is worth. And we're going to go through that kind of conversation at some stage in the future. There's already been, they started talking about it in Davos and things like that. So there is going to be a redefinition of the value of money. And this is something that's been going on for many years, since 2008, by the way. It's not new developments that are going on because of the pandemic. So don't believe that. It's something, the writing has been on the wall for since the 2008 market crash in the US. Okay, so we'll see what what happens soon. But this is kind of like another example that I wanted to share with you. Sorry, I actually cancelled it by mistake. But never mind. It was a list of the things that are being done in, for example, Internet Computer. which is another one of the kind of like big, large projects that was launched last year. And this is just one ecosystem. There is a lot of activity going on to the one ecosystem. Now their price has gone down, again, 90%. That doesn't mean that they stopping the development or they stop working on the project. No, it doesn't. It carries on, anyway, because they are building for the future. The same as all the projects that are doing good work are building, whether the price is, is like of Ada, for example, whether the price is $3 or the price is 50 cents, they still go to work every morning, and still build new projects. Yeah, they might be rewarded, obviously, better when the price is high because they get the rewards in cryptocurrency as well, generally. But the work goes on regardless of what the price is doing. So I hope that I managed to put a little bit of perspective into what really happened this week, and also in a way the kind of like cautious approach that you should take when approaching this world, because these things can and will happen. Okay, one of the positive things also maybe that would be main worth of mentioning as well. There's a couple of things. One that, well, this is interesting now because we've got big players now. They are starting to muscle into cryptocurrency exchanges. Now Nasdaq is partnering with XP to launch a cryptocurrency exchange in Brazil. Okay, this is one thing. Another bit of kind of little blocks, the Lego blocks they're building in the future. This is in China. Shanghai court affirms that Bitcoin is virtual property, so it's subject to property rights. These are bits of legislation that is defining what cryptocurrencies are, and we're starting to see more and more of this. There has been a case in the UK as well, where the same thing was affirmed by the courts. So this start forming precedents. Then following legislation will follow as well. So it's not just what happened to the price or what happens to the code that's being written in cryptocurrency, but it's what happens in the real world as well. Now that it's being used by more people, then it's coming in front of different authorities as well. And these authorities are actually making the laws of the country by making decisions like that. Okay, so even that is important. And the last thing before we talk about this, I don't know if I got something to show you for that, probably not, is Tether. So this week, slowly, Tether, for a short period of time, lost the peg to the dollar and went down to below 99 cents. So it wasn't as dramatic as UST, but in the case of Tether, that is backed by fiat currency money, then the mechanism worked. And if we look at price right now, it is gone back to gone back to parity pretty much. Okay, so you can see now that the price of Tether is just roughly at parity. Okay, on let's see, on Binance. Maybe I can't see the price on the other chart unless you cancel everything. Oh, sorry. Come on. Not the other way around. No, in this case, sorry, it's slightly. I can't get now the exact price for dollars, but it's roughly 99.99. Let me see. Maybe on CoinGecko will be better. So at the moment, it's showing perfect parity. So it's gone back to exactly $1. This is what is being designed to do. Okay, so at the moment is $1. Late, about an hour ago, before we started this this call, was 99.9 cents or something like that. So it looks like there were some doubts about Tether as well, in case nobody knows if they got exactly the amount of dollars to back the whole value, the whole market cap. As you can see, 79 billion, because some of the money they have as collateral is not in liquid in dollars, but it is in commercial paper. So they invested something in companies' debts, bonds, and so on. So, as the value of these companies goes down, the value of some of these bonds might also go down as well. So it might not be a completely backed 100% with $79 billion value in a US bank, but at the moment the peg is working perfectly fine. Out of all the stable coins at the moment, the ones that are are being deemed as more trustworthy at the moment are the USDC and the Binance USD. Okay, but USDT is the largest in terms of market cap by quite a margin. You can see about 80 billion against 50 the USDC and about 17 for the USD for the BUSD. So it's bigger than the other top two put together. Okay, but from a point of view, they are the US government is looking into Tether as well. So to understand exactly, we're talking back into regulation to understand exactly how much they are backed by dollar, if this is 100% backing or if it is 90%, 75%, whatever exactly it is not fully transparent at the moment, but it's still the main liquidity provider as a stable coin. Okay, so I've gone on for way over my usual half an hour. So let's take some questions, because I know a lot of you will have some, I've experienced some pain this week. Okay.
Question in chat, Luca.
Yeah. When was the last global recession? 2008. Yes, the 2008 is when we had the subprime mortgage crisis in the US, and then we had bank failures in many other parts of the country, like in the UK, for example. We had the Halifax, it was the largest mortgage provider. Basically, they went up the wall and had to be saved by being bought up by Lloyd's Bank, for example. So there was a lot that went on in 2008. Coinbase at the moment is all the let's say crypto denominated stocks on the stock market went down. So Coinbase has gone down a lot because there was also a requirement for them to put a term in the terms and conditions. So saying to people that theoretically the money that's deposited in Coinbase in case of bankruptcy could be considered by a court to be unsecured debt. Okay, so if it is unsecured debt, it could be used to repay the creditors. But it's kind of like, it is very, very highly unlikely, one, that Coinbase will go into bankruptcy, and two, that a court would take that view, because it would be quite an extreme view for an exchange to consider depositors' money as unsecured debt. Okay, so that's but literally, part of it, the price was going down because the whole price of crypto stocks was going down. And then again, there are these extra bits where people panic, like, oh my God, my money is not safe in Coinbase. And so a lot of people sold off the stock as well. So, Cornelia say, how big a chance you consider Ethereum to go the Luna way, since you consider the code not so safe, and none whatsoever. So the code is not safe, but the problem with Luna is they were used as backing for the for the USD stablecoin, and this is the reason why it went down. It's not so much the Luna code was not safe, because things can be patched up, but it's the stablecoin design that was wrong, really, if you can consider it that way. But it also, it's quite an extreme event that went on, because even what went on with Luna had to be started by a kind of multi-billion investment. And it's not something that would happen every day either. But it's not. There's no risk for Ethereum to go that way because it's not used in that way. Well, Billy, it's not so much that Coinbase spoke out loud, is that they were forced to put certain terms in terms and condition by the US regulator. So they were just doing what the regulator told them to do. And there was new regulation, so that all exchanges in the US need to use that kind of wording. So it wouldn't just be in Coinbase, but it would have been all the US exchanges that they included that kind of not exchanges, all the ones that are quoted on the stock exchange. They had to use that particular wording if they were collecting people's deposits in cryptocurrency. So that's the reason why they didn't. I don't think they would have put it there out of their own free will. Let's put it that way. Okay. Karen, does that mean I'm safer to move out of Coinbase? Personally, I never liked Coinbase, full stop. So I think there are better options out there, but not necessarily. No, I don't think Coinbase is perfectly safe. Maybe Jonathan, did you want to chip in and just explain to people kind of like how the design of some of these things is important and what's happening? For example, I mean, I don't know if you probably. I mean, I don't know enough about the Cardano stablecoin that's being tested right now, but how important it is at the are you thinking about launching these protocols and you're planning them and testing them? How that phase is important.
Yeah, the sort of fundamentals to the chains are crucial, and I mean, in this instance with UST, it wasn't even a blockchain attack; it was a concerted financial attack. So there's always that risk in all the chains, all the protocols. The approach that you take to building that out, though, is the important part, like you've said. And I think that if you haven't got, mathematics embedded in the heart of your design, and you haven't got it verified, peer reviewed, coming from white papers that are public domain, that are interrogated and tested, then you're not really giving it a chance. So, in UST's case, it seems to me that the sort of the front runner for the chain, for the design of the stablecoin, really was from an economic background, was looking for a way to make money, to become, to create a wealthy chain, as opposed to a stablecoin. So the backing to it was always vulnerable to rich players, and he knew that, and he'd been told back in 2021 that this was how we could attack your chain. This is how much money it would take. And he brave-faced it and said, no, you're talking rubbish. Please try it if you want to. We will win and we'll walk away with the money. But, that sort of bravado is not really a safe place to have your mindset in and around crypto when you've got so many big players with so much money in the Wall Streets of the world. They're looking to take advantage of any new financial instrument that comes up. So that's the attack that was taken on. So in the Cardano world, the chain was written. There was design for a stable coin built by the same teams that put the protocol together, and the technology was peer reviewed, put into white papers, and the decision was made that IOG, who actually wrote the tech, wouldn't be the ones to implement it. So they gave it to the Coty team, who have their own blockchain, have their own payment gateways, and they have a lot of experience in working with the financial markets, and the IO didn't have at that point. And so the implementation of it is handed over to another company to actually deliver on. And so that's where you see the approach. Okay, we're not in this to make vast amounts of money for ourselves. We're in this to make a new financial operating system for the world. And so that it's not about, okay, how can we maximize out of it? It's about, okay, this is the best tech we think we can build. We're happy to hand it into the public domain. Let's see who can make it work. And even just looking at the fundamentals of the JED stablecoin, which is coming up, it's actually launched on testnet now. just prior to the UST attack. And it's so in comparison, just I don't understand the economics too well. You're far better at that than I am, Luca. But the mechanics of it, you've got JED, which is between 4 and 8 times over collateralized, versus UST, which is just 1-to-1 backed. So actually, you've got, I understand that level of maths quite well. So if you're gonna build a stable coin, you want to make it as stable, as well backed, as well funded as possible. And so again, there are fundamental differences between the Cardano approach to building things out versus the VC backed, let's make some money here approach. And that boils all the way back down to the code again, which I've talked about before. The the maths behind it is solid. The theoretical modeling of what can go wrong is done by many different parties, by universities, just to try and see where the attack vector is like to come from, and what the surface is that's likely to be attacked.
Yeah, because I think maybe one way to summarize is that when we're talking about blockchain, we're talking about a distributed technology, and it's so the whole purpose of it is that to eliminate a single point of attack, single point of vulnerability. So it means that if one node, for example, of one particular blockchain goes down, then there's plenty of others that pick up the slack. So the problem is when by design you get somebody that, in the case of UST, there was somebody that was in charge of the reserves. So it again is a single point of failure. Wrong decision by this point created these all cascade of the problems that will start to just this whole thing only took about a week to then kind of demolish all the work that gone on for years to actually get to that point. But that's the thing you got to think about is that as Jonathan was saying, not looking at the project and make you a millionaire, but look at the things that that has considered the decentralization and ways to counteract things like this. And Eric, for us answering your question, yes, it definitely is a concerted attack. Definitely, I mean, at the moment, nobody knows exactly who was behind it. There are rumors in the communities that the BlackRock was behind the movement. Okay, and it was planned in also a malicious way. Now, whether this is true or not, we don't know. Definitely, they would have the means to do something like that. But I don't know if it's true or not. But those are some of the rumors. But it is, even if it was in a concerted attack, is the point that you expose a vulnerability, and once you do that, then the vultures are on it. Because if there are traders that can see that money can be made, they will. If they can short anything, they would short it because they know that, well, I get more money tomorrow than I have today at the end of the day. So you only need that. It doesn't even need to be. We don't have to worry about conspiracy theories, because if there is a vulnerability, there is a vulnerability. But as I personally see, as although as painful as it can be to go through something like this, it's a positive because it exposes vulnerability for the whole industry, so the other projects can plan so that something like this doesn't happen again. So the community, the crypto community as a whole, will get stronger as a result of this happening this week. It won't help the people that were keeping their life savings in Luna and Anchor protocol, for example, but still, in general, the community will come out stronger out of this. Okay. Any other questions, guys? We're coming to the end of the hour, so excuse me for the noise with the printer. I've got a printer behind me.
Yeah, I've got one, Luca. So what I'm looking for now is obviously it's bounced now, isn't it? So it's looking, everything's green across the board. So I'm looking to redistribute some Bitcoin into some of the other altcoins. And I was going to do things like a bit more Cardano, some internet computer, Algorand. Is there any easy way that I can see what's dipped the most so I can use that to pick up on the way back up? Because it's looks like it's reversed properly. Or am I
What-
wrong?
If you want to look, I mean, at the moment, I don't know. I don't know that question. I wish it was that easy to say, Karen. But you know, when price comes down, if you look at technical charts, there is what people call a dead cat bounce. Okay, especially when price comes down a lot, there's a normal reaction because people thinking, okay, now it's reached the bottom, I'll buy because I can make money again, and then the selling pressure starts again. So that's still a possibility. And personally, at the moment, there are more things that point to the downside that point to the upside. I think at this stage, I think people are just on the fence, okay, and waiting to have a good reason to actually get in or out, you know. So I wouldn't put all my eggs in one basket now and think, yes, this is the bottom and let's go all in. But if you can look, probably the best place to look at that is Binance, because you can get charts of different cryptos against Bitcoin or against Ethereum, because they got the largest number of pairings. So you can see the relative performance of different projects in Bitcoin terms or in Ethereum terms. So you can see the relationship. If you are planning to sell Bitcoin against something else, then you got to see the relative chart. Otherwise, it'd be difficult to because if you just see in dollars, you won't understand, because it's what you're really considering is the relative performance of one against the other.
Okay, so kind of maybe still sit on the fence at the moment to see what it does next, is it?
I'm not giving, especially here in an open forum, I'm not giving any financial advice, Karen. But I'm saying at the moment there are more indicators that point that the price will carry on going down, that there are things that point on the way up. Anything can happen right now. We are off the charts in a way. This is kind of like unbeaten ground so far, you know. So we don't know exactly what the next move is going to be up. But generally, at the moment, the market is very jittery, very reactive. So it will react generally to a piece of news, whether it's good or bad. So it's not necessarily a logic reaction thinking, okay, we look at the chart quarterly, the price has got there and now it's going to get there. It's not as simple as that. It is very, very emotional right now. And we're in extreme fear phase, which generally is, you know, fertile ground for investing. Because when people, they're just being counter reactive. When everybody's selling, you should be buying. When everybody's buying, you should be selling. So that's the easy way, you know, to get a rule for investing. But we don't know. The thing is this, okay, we're talking about probability in terms of price activity. The high probability now, if the price starts going down, whether it's most activity is in the 19 to 20 to 21,000 in terms of Bitcoin, okay, US dollar per Bitcoin. So that's the highest probability trade. If we were to go even below that, we could go down to the 85% drop from the top that we've had in the past, because the Bitcoin has done that before and it could do that again. 85% would be about 11,000. Okay, so those are probably the two big numbers to remember. We've touched that 24,000 that we talked about. If the market was strong enough, then that could be a turning point, but it's not really likely. There wasn't enough, you know, looking at the charts, there wouldn't be enough technical traders that just basically bet their house at that level. They would be waiting for price to drop more. Okay, so the highest likelihood is around the 20,000 level. And if that gets breached, then we might go all the way down to, you know, 11, 12. Okay, so those are the possibility, but we don't know. We could be, you know, I could be completely wrong, and the price already showing that compared to yesterday, we're seeing, yes, increases in 20%, 30%, but this is because yesterday they went down by 40. You know, so it's not it's not the thing that things are the tide is turning. We're still lower than we were a couple of days ago. You know, so
awesome.
Yeah, so we're still not saying that we're not out of the water yet.
No, okay, awesome. That's all I needed to know. Thank you, Luca.
No problem. Stan, did you have a question? I can see you got your hand up.
Yeah, just very quickly, just hindsight's a wonderful thing. If we just looked at what happened the last week, and Luca, if I tapped you on the shoulder and said, can I borrow your 1 million Terra last week, which was effectively $80.
Yes.
Sell it not at 0.00, but if I sold it at $1, that's $80 million.
Yeah.
Shorting. That's the concept of shorting, correct?
Well, yeah, what you're saying basically, it's just the opposite of, you buying to hoping that you're selling at a higher price. You do the opposite. You sell hoping to buy at a lower price. So you sell something, let's say, for $10 and you buy at $5. You made $5 in the trade. The same way as if you buy at 10, you sell at 15. It's exactly the same. The only thing is that when you're selling short, the actual gain you can make is limited because the price cannot go lower than zero. Where if you are buying on the way up, then the upside is unlimited.
Yeah. But based on those numbers, it was $80 a week ago.
Yeah. So the maximum you can make out of selling an $80 item is $80.
Is $80.
Yeah.
And that's
so
what I'm
$80.
saying. I'm just hypothetically using 1 million Luna. That's potentially somebody could have made $80 million in a week.
No. Sorry, you're wrong. If you sell $1 million worth of Luna, then you can make $1 million. If it goes to zero, that's the maximum. It's the other way around. If you buy at a fraction of a cent, you were thinking about buying now at a fraction of a cent and then selling at $1. In that case, you can make, because the price now is basically zero almost. You can buy, millions of it for very little. Then if the price started going up, yes, you could make a fortune. But at the moment, Luna and USD are being delisted from most exchanges. So you'd be hard pressed to buy full stop. And, at the moment, you don't know if it's going to get back to any value. Probably, if the problem was relaunch, it probably will relaunch with a different token because obviously don't want to be exposed to something like this, I expect. But I don't know. I don't know about this exactly what they're going to do. Are they planning to do anything about it? At the moment, it's dead as of now. If it's going to be resurrected, we'll see. But yeah, I wouldn't want to have even USD at the moment is difficult to get out of. It's difficult to exchange it for something else. Even at the value of whatever it is, 10 cents. So we'd be lucky at the moment to get 10 cents on your dollar of money that you thought was safe for your, forever and ever. So it's a hard thing to take, I must admit. And I do know people that were using USD and Anchor protocol as their main, almost like bank account. So it's really tough to take this because it would have wrecked an awful lot of people. And by the way, some people would have made a lot of money. There have been liquidations for over $1.5 billion because of this price drop. So there are traders that have been completely liquidated, they lost everything, and lots of them. This I'm talking about, hundreds of thousands of people. Okay, so this is will leave scars this week. What happened this week will leave scars all the way, but hopefully will be better because in a way it's kind of like you drawing a line on the sand and telling people, look guys, this is not just a way for everybody to become rich tomorrow. Okay, you still need to pay attention. So approach this space with a little bit more calmness. Okay, so and from the point of view of the actual behind the scenes work, then a lot of protocols will be revisiting their code. Let's say, make sure that they are, the more they got more fail-safe protection than a USD and Luna had. All right, okay, guys, I will need to close the call now because I've got some more calls starting soon. So I'm just hoping, have you found it useful? I really hope you have. And
yes, very much so.
Yeah, if I could ask you, if you still haven't done it, please a little thing. If you're on Genius U, if you could just please give it just a little review, if you find it useful. So on the Crypto Investor Club, go into the review, click on there, and then you can type review. If you think it's good, then give me 5 stars. If you think I'm rubbish, then give me whatever you think. Okay, it's
I've
fine.
already done one a while back. Can I do any more? Can I carry on doing them?
You know what? I don't know, Karen. I don't think so. I think maybe you could edit your review. I don't know if there is a facility to do that. I'm not an expert on GeniusU workings, but no, I'm sure that you can do any more.
Well, you had a
reviews.
very glowing review anyway.
Thank you very much, Karen. I'm very grateful. Okay.
Well, you deserve it. You're awesome.
Thank
Thanks very
you.
much.
Okay, thank you, everybody. Thank you for coming here and and taking part and making it interesting. So I will catch up with you again next Friday. Hopefully, we'll be in different circumstances and we could talk about happier things. But we'll see. Just keep your eye on the crypto news, because at the moment it's all very fluid. Okay.
Is it the same link every week, Luca?
Yes, it's the same link every week, so you can just use the same link for the Zoom call.
Awesome. Thank you.
Okay.
Have a good day.
Thank you very
Bye-bye.
much.